So with the year wrapping up, we're coming into December. I thought I would take a look at some of these popular COVID-19 stocks that are doing well because of COVID, or maybe despite COVID, they're doing really well. You could say that COVID has really pushed some of these stocks to be very successful. The first one being Zoom. Zoom really took off due to coronavirus and the work at home economy, the stay at home economy. A lot of people use it now for video conferencing. So we're going to look at Zoom and see how it's done. We're going to take a look at where it's going to go in the future, or where, based on my analysis, where I think it wants to go. We're going to look at Walmart, very popular as well, as people are eating out less and staying at home more. The thinking is that they want to stay at home and go shopping and cook more, or, that kind of stuff. Peloton is the third one we're going to look at. And, these stocks show up in the news a lot. There's a lot of people that write about these stocks, here Seeking Alpha, where this author thinks that it's time to sell Zoom. Is it really time to sell Zoom? Maybe you're holding Zoom and you held it through the recent high at close to $600, and you're wondering, man, is this thing ever going to get back up there? Here's the Motley Fool with this author saying that, Walmart is his first, highest conviction holding here on the list anyway. It's the first in the list, saying that this is his highest conviction holding. Note the operative word being holding, and not my highest stock picks to open new positions in. These are, if you have a position in Walmart, hold it. And then we have Barron's, saying that Peloton is still in demand, and so is the stock. So we're going to take a look at the charts and the chart only. Okay, I am not really a fundamental trader. I don't really care what these stocks, what their business actually does. I don't look at cash flow. I don't look at, PE, P to S. I don't look at quick ratio. I don't look at any of those. Okay, balance sheet. I don't read any of that stuff. I trade based off the charts. So if you don't like that, then obviously you're not going to find this information very useful. It's worked for me. So, if you don't like it, that's not how you roll, and, that's okay too. There's a lot of other YouTube channels out there that do, more fundamentals based. I am just not one of those people. So let's go ahead and start with Zoom. So the first thing, when you look at Zoom, is you look at it and you say, wow, this thing has been on a tear, close to $600 high, took off around the beginning of the year at like what, $60? So $60 to almost $600. I mean, that's just insane, right? Let's take a look at the stock here. And I've already actually made the little trend line here, which is just tracking, from around the time that the COVID lows were put in for the overall broader market. It opened and closed down 30%. Okay, so notice that it closed down 30% of the stock's high, of the stock's value prior to the coronavirus, news really just devastating the market for a good few days there. Let's look at the recovery here in the next few days. It sells off over 7 days, and it takes 1, 2, 3, 4, 5, 6, 7, 8 hesitation here. So it takes maybe 15 days before it picks back up and makes a new high. Not bad, actually. This phase here, we're seeing slowness, a lot of selling as price tries to crawl upwards, and then all of a sudden it really just takes off here. I think this is a lot of the news that started to come out about how stay-at-home economy, all that stuff. And from there, it's really just, no looking back. You can really say this is the last point of support here, as the stock it puts in a low, gets bought up, and then just takes off running for the next, up until present date. So the question that I always have when I look at a stock is, where does it want to go to next? And a lot of that is really driven by its prior price action. So you want to look at a stock based on its prior behavior. So if we look at the prior behavior of Zoom, I mean, it's really obvious. This is a very, very strong stock. There's a lot of room for it to grow, potentially even past $400 and get back up to $600. So we just got to be careful to make sure that this is actually a reaccumulation zone and not a redistribution zone. So really, looking at this, it's kind of up in the air from whether this is accumulation or a reaccumulation phase or a distribution phase. But what we can take a look at is, where it is in the short term and intermediate term. which is where my analysis will mainly focus around. So from the long term, I would say a year or from, a longer term perspective on the order of like, let's say 8 to 12 months, we're in a bracket, right? We've been bracketing since, September. So close to 3 months now, over 3 months, we've been bracketing here between this $588 range and a low of 346. So we're trapped in this level where, price is, you could describe this as price is steadily squeezing higher. It's putting in slightly higher lows here. But one thing you want to be aware of is that the quality of this rally here, after this kind of ugly selling, the quality of this rally in terms of the volume is a little low here, okay? So you can see that the volume on the buying is actually decreasing as time goes on. And then the earnings report comes out and the next day it sells off. So, a lot of traders and investors are going to look at this candle here and they are going to be a little bit scared because why? First of all, large volume pattern here on the 30th and on the 1st, right? Looks really scary, opened up at 434 and closed down at 406. So, kind of an ugly day, a lot of selling, a lot of red here. And the question is, for me, where's the follow through on the next day? Well, there is none. The net effect is actually higher prices. So based on the immediate short-term week of trading, the last 5 days of trading, we see that it goes down, yeah, but there's no follow-through on the part of sellers. My question is, if you were truly bearish on the stock, or let's say that there's a lot of strength on the part of sellers, why did we not see sellers step in after such a strong candle and a strong close to continue taking prices down to, let's say, exploring back down to the 366 level, or possibly even tracing down to the 347 level? This would be the ideal time, right? This would be the ideal time after such a strong and vicious close to really travel downwards and see how low they can truly get the prices. But they didn't, right? The price actually closes higher the next day, slightly higher. And on the Thursday and Friday's 2 days of trading, a lot of indecision, not much action, and the volume pattern also decreases greatly. We're looking at 6 million here to 4 million from close to 11 million on the day before these two. So, it's drying up here. There's really no follow through. The question you need to ask yourself is, if sellers were really strong, it was truly time to sell this stock, why did sellers not step in on the low volume day of trading? Why did they not step in here? Why did they not step in there? So based on this analysis, my thought pattern here is that it's not going down, it's not going up, it's probably going to bracket sideways for a little bit. A lot of the times what you'll see and what I've seen in the larger tech stocks is that they've put in a high, and go look at Apple, go look at Microsoft. I'm not going to look at them here, but if you look at them, they've all put in highs, they've all put in lows, and they're forming a type of triangle pattern. So, if you look at those charts, you'll see that they're all forming this type of pattern here, right? So as the activity shrinks down, as the volume shrinks down, it will go in one direction. Currently, to me, that direction is up for now. Okay. This would have been the time for sellers to really push the prices down, and they didn't. So seeing the absence of sellers, we can only conclude that the majority of investors in this stock are still long. Okay, let's go to the next analysis of Walmart. So I find Walmart really interesting. Consumer discretionary, staples. It's something that you got to shop at. Fundamentally, on the news, people say, "Oh, it's a stay-at-home stock. You want to go shopping, buy groceries, cooking at home, all that good stuff. You're not eating out anymore. Walmart's a good one," and it is. It's true. It's done really well. It's gone from 100 to about 150. It's at 148 today. So notice that it fell during the COVID lows of about 16%. So didn't lose quite as much as Zoom, but then again, it hasn't gained as much. Right, it's gone up by about 50%, which is still really good. I'm not saying that's not good, but relatively speaking. So you first see here, from about April to June, prices are actually selling off. So not a whole lot of activity going on here, really quiet, just selling. And I think a lot of traders here are just kind of losing their focus, losing their commitment. They got poor entries. Maybe around this time they tried to buy on strength, and they get crushed. They maybe buy here thinking that mistaking this for strength, and price collapses and it falls out from beneath them, and it just steadily continues to roll downwards until here. We see that some strength comes in, some demand comes up, and just starts running. A minor selling period, more scary selling based on supposedly earnings, but look at the recovery just a few days later. One candle completely erasing what looks like about a week and a half of selling, comes back up to put in a high here at about $150, and since then it has not been able to beat this $150 level. There's a lot of selling going on here. Okay, is it profit taking or is it shorts initiating a position? It doesn't really matter. All we know is that there's supply coming into the market. But let's take a look and see what the quality of the selling actually looks like. So when you look at the quality of this selling, this is good quality selling here at the beginning of September, right? So this was around, this is Labor Day. A lot of, the market generally speaking was in decline during that time period. So we see that stocks form a high up here and then they continue to sell off. Very strong selling. This is high quality selling. Volume stays elevated, 17 million, 16 million here, 11 million. And so it is going down over time, but it's staying relatively elevated, staying constant before it finally carves out a bottom here. Price is unable to go down any further. It's, they try here, big red candle, no follow through the next day, another red candle, no follow through the next day. Price picks back up, and continues running, forms a low here at 137, but notice that this is a higher low, right? So we have a higher low here, and then we have a rally all the way up to 153. Very interesting candle, no follow through. So you see that Walmart, this stock, has a lot of candles here that don't have a lot of follow through. So the price runs all the way up, puts in a high here, trades back down, puts in a new high looks like 2 weeks later, puts in a new high at 153, continues selling off. Now the question is, will this selling reach the other side of the bracket? And to me, the bracket right now is at 137, right? Because from this 137 level spawned the move to 153. So is this the area that we should be targeting? My answer to that is no. This is not the level that we're going to target. Now, I'm not advising that you enter into a trade, but I'm just looking at this and visualizing if you were to enter in a trade here. First of all, I wouldn't do it because you're at the upper end of the bracket. But if you were long here, if you were long 137 and you're looking at 153 and price comes down here, the question that's probably in your mind is, well, should you sell? Should you get out before it gets down too late and cut your losses? My answer to that is no. If you look at these 4 candles, you're seeing that the price of Walmart, okay, the price of the action here, okay, notice that they have large buying tails, okay, so price is going down, but then again, someone is finding it valuable and attractive at these prices and pushing it back up. Okay, so you can see that there's some stopping power entering the market and really stopping the advance. So you're seeing, a gradual stop off, similar to what we would expect down here. So you see that initially the selling looks bad and then it just kind of like rolls off, right? It just drops off slowly and kind of, this is like almost like a free fall, and then the slope, becomes more gentle, right? The slope flattens out here at the bottom. So we're kind of seeing the same thing here where it's initially, it looks really bad, but on these 2 candles, it's evening out here. The slope is evening out. So based on this to me is a test of the breakout, right? We're seeing a test of the breakout of this level, and price is closing down. Okay, that's fine. But there's a lot of buying at this level, and you'll notice that over the course of these 2 days, The close is here at 149. The close here is at 148. Only $1 difference after 2 days of selling. You really need to question whether or not that's actually quality selling. It's not quality selling, right? This is, to me, it looks like pretty weak selling. So, at this point, to me, the line of the path of least resistance is still up. There's a lot of selling activity going on here. And more notably, after these 2 days of selling, you're not seeing a lot of progress being made on the downside. 149 to 148, only $1 difference on the downside. You're not seeing a whole lot of progress here. So again, the path of least resistance to me on this stock is still up. And let's look at the last one, Peloton. So, Peloton is, again, a lot of these stocks kind of follow the same pattern of other stocks. So as you look at the very beginning, from the COVID lows, a decline of 40%. Okay, pretty rough, but of course that's pre-COVID, for the pre-COVID high. If this is all you were seeing and you were long in Peloton, you probably got scared to death. Okay, you're looking at your equity dry up from about $30 to $17, $18, right? So the 40% loss there, very, very scary. Of course, when you put it into perspective and you see, oh wow, price went up to 140, it doesn't look so bad, but got to keep that perspective in mind here. This is all you're seeing at that time back in March. Looks very scary. So from then we can see that Peloton is a fairly strong stock. On the nature of the selling, we'll get back to this candle, but on the nature of the selling here it's just, a few red candles here and there, but nothing sustained, right? You have a bracket zone here for a quick, 2-3 weeks here. It brackets for a little bit at these two levels, and then it breaks out, it brackets again, it brackets again from between these two levels, it breaks out, it commits above, shows strength, sells back down, and then from September, the middle of September to October, it's really just pumping higher and higher, and it looks like really good. You're probably wondering when the buying is going to stop. Oh, and it stops, around the same time. Or no, not around the same time. It actually doesn't stop until the middle of October. So it pumps for about a whole month before it sells off. There is an attempt at a rally here off earnings. So you see that the volume picks up here. All right, notice here on this rally here, the volume picks up from 8 million, doubles to 16 to 24 million. And you look at this and you ask yourself, where is it going to go next? Notice that the volume is increasing, but the results are not showing, right? You're spending more volume, you're taking more volume, but the price is actually lower on the 6th of November than it is on the day before, on the 5th. So you really have to ask yourself who's in control during these three candles, and it's not the bulls, it's the bears. As you can see by the next day, price takes a hit. So now, knowing that, the question that we need to ask ourselves is, where does price want to go after this? And let's go ahead and draw our resistance line here up at 139. And so based on this, you can see that, roughly speaking, we're coming up close to the mid-range of this level. Right, so you can say that there's a mid-range somewhere around the $120 level, right? So, and then you can also see that there's a point of, there's a level here that was broken through, and it looks like we want to contest the low of this candle here, which is where we're at. So now notice the quality of the rally. It looks okay. It doesn't look like it's incredible buying. It doesn't look like there's incredible buying power coming in here. You see this, nice green candle with a long buying tail, but nothing really that says this is going to stick or that this is, true power here. Based on what I've seen on Peloton, however, though, is if you look at the previous price action, it does have this quality of almost just drifting upwards, right? So if you look at this period, there's not any real, big green buying candle other than the first, two candles here. It's just kind of steady drifting, on the selling days, they're all being bought up, and they're just, steadily, slowly drifting upwards. So You know, this is the quality, this is the typical quality and characteristic of a Peloton rally, right? This is just what they look like. So this could easily, you know, if you know, and again, if you are long in this position here, it, you know, hypothetically speaking, you know, you would stay in your trade here, right? You haven't really seen any real selling coming in, but it does look as if the buying is kind of slowing down here. The question is whether or not sellers will seize this opportunity to take it back down to 96. But if you're long here, you know, this is the ideal trade location to get in on the lows. So if you're long here, this is not really reason to leave, right? It's all relative, you know, to where you got in at. So, you know, if a trader were to be long here, you know, well, you should have left on this candle, right? You should have left after seeing this big ugly red candle form, you know. But if you're long here and you see this red candle form, you're in a different position. So here, you know, this is not reason to leave. This is actually okay, and it's a stock that you can stay in on. So currently, the path of least resistance on this stock is also still up, targets the 120 level and targets the 140 level. You know, assuming you're long down here. If you're not, well, you know, it's a little bit too late. This is the ideal location for you because you don't actually need to be afraid at this point. This is all relatively, you know, this is all expected, right? It's expected that when you buy down here, that you would target the mid-range and that you would target the opposite side. So if this does, you know, and not every single stock goes brackets all the way, you know, perfectly from the top to the bottom to the top to the bottom. They'll bounce around, hug the bottom, come back up, show strength, and break out, right? But at this point, if you bought down here, you have optimal trade location, you're safe. If it comes down to this level again, that's actually probably another, you know, ad phase for you. You want to buy more, and then you would target this level again, and then target this level up here. So, you know, that's looking at it more tactically. So, essentially, my thoughts on all three of these are, yeah, they're definitely the path of least resistance is still up. There is still some progress to be made on the upside for these stocks. You know, if you wanted to sell, it's not really time to sell other than if you wanted to secure some profits for whatever reason. You know, if it hits your take profit, that would be ideal. So these are just my thoughts. They're not, you know, financial trading advice. You could lose a large sum of money. So this is just educational purposes only. And yep, that's it.